You see, our Reserve Bank, in their mandate given to them by the government, they are allowed already to look through transitory, special things that come along and cause a bit of an upward shock to the inflation rate, which is, partly what we've got happening at the moment. Well, hi again, everybody. This week I just wanted to take the opportunity to address a particular issue that is arising around the world at the moment as we see inflation rates going up as a result of energy costs skyrocketing in the northern hemisphere. Here in New Zealand, supply chain disruptions coming along. Our inflation rate is now 3.5% and very soon it's going to go above 4%. And I've been sort of waiting for a particular thing to happen, and I finally saw it just the other day. An article in mainstream media where the person was saying because of all these special factors pushing up the inflation rates around the world, and because there was really not all that much an increase in interest rates could do to address supply chain problems, closed factories in China, geopolitical tensions with China, climate change, etc., that maybe governments and central banks would decide targeting low inflation near 2%, it seems reasonably pointless. Let's lift our inflation target. Maybe go for something higher like 4% or 5%. Well, I haven't seen this for quite some time, and it is exceedingly dangerous because if you start reading these articles, you're going to believe that, oh, okay, it makes sense. I guess they won't put interest rates up all that much. Well, yes, they will. You see, our Reserve Bank, in their mandate given to them by the government, they are allowed already to look through transitory, special things that come along and cause a bit of an upward shock to the inflation rate, which is, partly what we've got happening at the moment. And what they focus on is what we call the second round impact. So if inflation goes up, if nothing more happens, that's fine. Maybe interest rates don't even need to move. But if you see a lift in the pace of wages growth as people look for compensation for the increase in their cost of living, now then that's something the Reserve Bank will pay close attention to. And of course, that is, I think, a reasonable expectation about what's going to happen when you look at the extreme shortage of staff in New Zealand, Australia, the UK, the US, etc. Wage earners are in their strongest bargaining position in something like maybe 4, if not 5 decades, depending on the country. And that says to me there is a very strong case to be made for second round effects of wages going up at a faster pace. And we can already see a bit of it out there in New Zealand. But of course, once we get through whatever the heck this coming summer is going to bring, I expect even more acceleration in wages growth next year. And of course, then there's sort of, you can say it's the second round or the third round effect. Will businesses look to recoup the cost of their higher wages? Well, in the old days, maybe not, because if they put the price up on you and I for something we want to buy, I'll go online, I'll find something cheaper. If a business now puts the price up on me, I'll go online, I'll find something cheaper, but I'm not prepared to wait 6 months for it to be delivered, whereas before all the supply chain disruptions, I might only wait 4 or 6 weeks if it's coming from overseas. So that particular dynamic, the disruption to the supply chains, is bringing in inflation risk of a follow-through after the wage increases following the increase in inflation already out there. What it adds up to is interest rates are going up in New Zealand. The Reserve Bank pick that they will go up 1.75%. They've gone 0.25% so far. I suggest you budget for about a 2.5% increase in your interest rate over the next couple of years. So if you were recently paying 2.19% 1 year fixed interest rate, work out how you'd be at something maybe as high as 5% in a couple of years' time. And just watch out for people talking about targeting higher inflation, believing that somehow means interest rates will be kept low. Economics doesn't quite work that way. All the best out there.